Good morning, everyone, and welcome back to XM.com. It's Monday, March 21st. I'm Christina Barthenido, investment analyst, and Euro-dollar is on the daily chart today. The market is in a very quiet trade today, remaining silent around Friday's closing price, but encouragingly, it continues to trade slightly above the 20-day moving average, which is acting as support around 1.1036 today. If we look at the momentum indicators below the chart, the RSI is maintaining its positive trend. Likewise, the MACD keeps recovering above its red signal line and above its recent lows. But the RSI has yet to break above 50, and the MACD is still within the negative area, and that suggests that downside risks are still alive in the market. The fact that the price is still trading below the nearby resistance of 1.1120 and 1.1180, which coincides with the 61.8% Fibonacci tracement of the uplift from 1.0636 to 1.2348, is another discouraging sign that bearish risks are still in place in the market. Also, it's worthy to note that the market structure has been taking the shape of a rising wedge, which is usually a bearish signal when that emerges at the bottom of a downtrend, which is currently the case in the market. So that technical structure over here is usually dissolved on the downside, and if that happens, if the price breaks below 1.10, which is the 78.6% Fibonacci level, then probably the sell-off will continue towards the 1.09 key level. If that fails to hold, then the price may attempt to resume its negative trend below the 1.0850 and 1.0780 territory in order to reach the pandemic low of 1.0636. Now in the positive scenario where the price rebounds near the 20-day moving average, the negative risk could still remain in place unless the price clears the 1.1120, 1.1180 territory. This is where the 50-day moving average is converging to, so any break higher from here could be important to watch, and perhaps could trigger the next bullish wave towards that tentative descending trend line from June 1st. So if the rally continues beyond that trend line, and particularly if the price manages to close above the nearby resistance of 1.1370, then I expect more progress towards the 50% Fibonacci of 1.1492 and the 200-day moving average. At this point, another successful violation could improve the medium-term outlook from bearish to positive. So overall, Euro-dollar is still at risk of a downside correction despite its latest rebound of the 22-month low of 1.0805. To become more confident that the recovery in the short-term picture will continue, I would like to see a decisive close above 1.1120 and 1.1180. In the medium-term picture, a stronger rally above 1.1492 is required to improve sentiment and bring fresh buying. So that's all for Euro-dollar today. Thank you for watching. Have a great day.